and welcome to Asking for a Trend. I'm Josh Lipton. For the next half hour, we are breaking down the trends of today that'll move stocks tomorrow. There is a lot to keep track of, so we're focusing on what you need to know to get ahead of the curve. Here's some of the trends we're going to be diving into. Stocks closing higher after a record-setting week on Wall Street. At the end of the trading session, all major indices did end the day in the green. And we're in deja vu mode here when it comes to meme stocks, but this time, way beyond GameStop, we're taking a deep dive into the resurging trend in investing. And buzzy H2O brand Liquid Death, it's moving into the energy drink space. We're talking with the company's CEO about the next wave of Liquid Death's business. Well, meme stocks are back in the spotlight as retail traders flood into names like Opendoor and Krispy Kreme and GoPro. Momentum is building, but so are potential risks. And for more, we want to bring in out Tom Bruni, Editor-in-Chief and VP of Community at Stockwits. Tom, always great to see you, especially on set. So let's start right there, Tom. So meme stocks, we're talking GoPro and Krispy Kreme. When you watch these moves, Tom, is it fun? Is it concerning? What do you make of it?
Yeah, it's a bit of both. I think it's a sign of the environment we're in. We've had a record rally off the April lows. Most of the major indexes up 20, 30%. Stocks like Robinhood, Coinbase, Palantir, retail favorites are up 200, 300% in this short period. We're coming off two back-to-back 25% plus years in the S&P. And so, I mean, animal spirits are alive and well. I read a stat today, 70% of the options market volume is on the call side, and 27% of year-to-date volume in trading across the board is coming in stocks under $5. That's even higher than during the pandemic.
Because I asked that question, Tom, because I can understand some viewers will be watching this and they would be thinking to themselves, well, all of a sudden we're talking about, Josh and Tom are talking meme stocks, we're talking about SPACs again.
Yeah.
Just whether you see this sort of speculative activity and is it a sign to you of froth in the market?
Yeah, typically we see this type of activity towards the latter end of a move. So again, not calling a market top, but I mean, think about it. We're up 30% in the indices over 3 months. A lot of great news has been priced in, and I think earnings season is kind of bringing the market kind of back into focus on the fundamentals. And so I think it's just a sign of the times. People, when you see your portfolio going up 25% in 3 months, you're not really interested in making 1 or 2% here. You're going for multi-baggers, as they like to say online. But I think it's also important to frame the conversation. People are not all in and all out. They are using a portion of their portfolio that is for fun and speculation and growth for these opportunities, and not necessarily taking the excessive risk that I think a lot of people think of.
And when you're watching these moves, Tom, do we have line of sight of who's in? I mean, is this retail traders? Is it the pros? Is it both?
Yeah, what I've been saying is that retail is starting the party and then forcing the institutions to dance. And what I mean by that is the institutions are kind of setting these stocks up for a meme type situation, heavily shorted, brand names that have some fundamental value, but are not going to zero. And then we have sophisticated investors online, retail, using market mechanics against the institutions. So in the situation of Kohl's earlier this week, the stock moved from $11 to $20 in the pre-market. It doesn't take a whole lot of volume on the retail side to be able to move a stock like that. And if you're an institution that's short, or hedge against that stock, you got to make that move at the open. And so it's kind of a situation where retail is saying, hey, this situation doesn't make sense to us. There's a fundamental case to be made here, and we're going to move the market in our direction, and the institutions will have to adjust.
Let's say you're a GoPro or a Krispy Kreme.
Yeah.
You see these moves, right? What should be, you think, Tom, your reaction, your response?
Yeah.
How should you, if at all, try and take advantage of it?
I mean, every company with high short interest right now should be thinking about how do we convert conversation and attention into capital and long-term shareholder conviction. The difference between this being a short-term move where the stock just pops and moves lower is management's ability to go out there, raise capital, get their balance sheets in focus, and really tell a compelling story for shareholders to say, hey, this is not just a trade. We're really turning this business around. There's a fundamental reason to be involved here. And I think it's the investor relations departments, the executives that are using online platforms like Stockwits, like Twitter, like Reddit to get their messaging out there and tell a compelling story. Those are going to be the ones that stick around. Those who choose not to engage with retail are likely going to see their stock fall.
Let's have another name I want you to take on Open Door.
Yeah.
We had EMJ's Eric Jackson on Yahoo Finance talking about the name. Take a listen to what he had to say.
Open Door is not a meme stock. This is a real turnaround, legitimate turnaround story. It's an opportunity for anybody who missed Carvana. And I missed it at 350. I got in at $15 on Carvana. So I think I do know what to look for in these kinds of situations. And I think that this is the ground floor for a move to 82.
What do you make of Mr. Jackson's comment? He's talking to Open Door and he's saying, listen, this is a real story. This is a fundamental story. What do you make of that?
Yeah, I think individual story aside, I think that's what's kind of attracting people to these situations. They see a company that's beaten down, highly bet against, and there's some glimpse of a fundamental case to be made where somebody can say, you know what, I kind of believe that. You know, maybe it shouldn't be trading at 82, but maybe it shouldn't be trading at $1. And there's a lot of room in between there. And so we're seeing people reassess situations that have otherwise been left for dead. And as retail gets into these names, institutions also have to adjust. And again, I think it's going to come down to the management team of Open Door. What do they do with this situation? How do they create a compelling narrative? Because right now it's all about the stock price. It's all about what's happening with trading. But what's actually happening with the company? What are they going to do from a strategy perspective to get this back on the right footing?
More broadly, Tom, I'm also just interested in the Stockwits community. How do they feel right now about this market? Where do they stand on this rally after the move we've seen after that April low?
I mean, it's quite amazing. Throughout the April period, we saw kind of institutions running for the hills on tariff concerns, but retail was in there buying the dip, and they've been quite aggressive throughout this entire rally. With that said, we're seeing some catch-up plays, come to fruition here. So instead of focusing on a Robinhood or a Coinbase that's up, hundreds of percentages already, they're looking at other opportunities. We're looking international. Japan just signed a trade deal. Chinese stocks are set to play catch up if they can get a deal. So people are looking for value. They're still bullish overall, but they're looking for opportunities where maybe the puck is going as opposed to where it's been.
When I last spoke to you, Tom, I remember, correct me if I'm wrong, but there was a lot of interest and enthusiasm, again, the Stockwits community, on themes like nuclear, themes like AI, crypto. Are those still front and center?
That's continuing. You're just seeing money rotate within those themes. So rather than play it directly through NVIDIA or directly through the same names, they're looking for other opportunities. So lithium stocks are a big one that I've seen pop off over the last couple of weeks. Solar stocks are catching a bit again. So people are seeing these broader themes and saying, okay, instead of buying the nuclear energy stock that's already up 400%, maybe I buy a solar stock because I know that there's going to be some energy component to this kind of broader theme. So
last question, Tom. What about crypto? Is that still a point of interest on the platform?
It's it's kind of spread as risk appetite has kind of widened here. Seeing a lot of meme coins, a lot of interest around Ethereum. There's a couple of treasury, Ethereum treasury companies out there. So definitely a hot area. I think the next phase for crypto and where people are looking on crypto twits is stable coins. We've got Circle, we've got Robinhood making a big move into staking and stable coins. So I think that's kind of the next leg of this crypto market rally.
Tom, always great to see you, especially on set. Thank you, sir.
Thanks for having me.
Stick around. Much more Ask for a Trend. That's still to come. The S&P 500 clears a fifth straight record while the Nasdaq hits a fresh high. And Yahoo Finance's Jared Blikre joins us now with the trading day takeaways. Jared.
Thank you, Josh. In this bull market, we are seeing a lot of low volatility days, and that's what we're seeing right here, melt up. And I will show you the week's action in the S&P 500, just to reiterate what we saw off the closing bell. And by the way, let's just start with the sector action. All 11 sectors for these 5 days in the green. Interestingly, healthcare led. You don't see that very often, at least not lately. Then materials, industrials, real estate, financials. So an interesting mix, mostly cyclicals in there, but also the one defensive, which is healthcare. Tech, the lag laggard, and you got to think what's going to happen next week once we have all those big tech earnings. But we'll leave that for next week. And let's just check out the S&P 500 over these 5 days, and they're a fresh record every single day, up 1.5%. And I was sitting down with Jeff Hirsch of the Stock Traders Almanac. We're going to listen to him in a couple minutes here, but I just wanted to add, when we have a low volatility period, and it's been almost 20 days now, when you get a break to the upside out of that, you usually see more upside. So, but if you get a break to the downside, well, you usually get more downside. So whenever we break this low volatility spread, that's going to be top of mind for me, and it's probably going to take you, it's going to be an indication of where the next part of the rally or the decline goes.
What has been the big driver of the markets, Jared, outside of stocks?
It has been the dollar over the last 24 hours or so. And this was really interesting because I was watching that it wasn't really a press conference. President Trump was walking around the Fed building with Chair Powell, and there's a little bit of drama there. But the dollar was heading higher after that, and that's just based on some of the headlines that came out of the meeting that Trump is not going to replace Powell, at least for the time being. And so we saw this, it kind of melted up overnight, and the net result is over the last 2 days, it was up about 33 basis points. Doesn't seem like a lot, but in currency terms, it's not nothing. And I'm not ascribing all of the downside in commodities and crypto to it, and let me just put the futures board on there, but I think it was definitely a factor. And so here's our commodities board, more red than green. Looks like softs leading the way down, OJ and also coffee down the most, but also silver, palladium, and then sugar. And then looking at crypto, I'm not going to spend a lot of time on this, but Bitcoin kind of slid down below some support. Let me put the year to date on this so I can chart this for you. Here we go. So we did have a little bit of a range here, a break of the range, but in the big picture year to date, just barely looks like a blip on your screen there.
We keep hearing, Jared, of a skinny bull.
Yes.
Skinny bull with low breath. What do we mean by that?
Well, let's take a look at the tech superboom or think about it. And here's where I want to call out that Jeffrey Hirsch clip that we have prepared. Sat down with us on Stocks in Translation. He's, of course, the editor of the Stock Traders Almanac, so he's very much into seasonality. But separately, he also tracks some of these super cycles, and these are multi-year cycles, sometimes multi-decadal cycles that we see in some different markets, especially tech-driven. Let's take a listen.
This is all part of our longer-term outlook of what we call the super boom, which is based upon, inflation and the end of war, like peacetime, and also technology, what I call a culturally enabling paradigm-shifting technology. This is something that Yale discovered back in the 70s, where we see these moves after these post-war periods of 500% or more. We came out with this in 2010, this forecast for Dow, 38,820 when it was about 10,000.
All right, so getting back to your question, what's up with the skinny bull market? Mm-hmm. It's true, we've had less than half of the S&P 500 stocks really participating year to date. You're not seeing these wild, bullishly internal stats like 70% above their 200-day moving average. And then you take a look at the smaller caps, and here's what I have on the screen here. I'm comparing the Mag 7 to the IWM, which is a Russell 2000 ETF, since the election. So basically since November 5th. And the Russell 2000 here is break even. It's barely been able to hold its water here. And of course, there is a big decline, and it declined more than Mag 7. But here's the Mag 7. They are only back up to their highs. And even the Mag 7 are kind of struggling, it seems, to carry the market. The Mag 7 have really become NVIDIA and Microsoft. Those have been the biggest two drivers. And I want to show you something else here, and I'm going to wrap this all up after a few more charts. Here's ARK Innovation Fund versus iShares Russell 2000 ETF. You can see it has just rocketed past these old highs here. And then here's Bitcoin versus small caps. And this is up even more, 68% versus a break even. So where is the strength coming from? You're not seeing it in the middle of the market. You're seeing it from some of the big players and then a bunch of fringy places like innovation, like disruption, like crypto, and all these other smaller places. And we also meme stocks. I mean, we just did an entire segment, or you just did an entire segment on it. That's where we're seeing the money flow. So you put it all together, there's a vast swath of stocks that are not participating here, but things look good if you're in the right places, or if you're just in the major indices and you don't mind watching things go up just a little bit every day.
Finally, what's on the Jared Blikre radar for next week?
You know, I am interested in some of these big tech earnings. I do want to see what happens with Apple. I'm not counting Apple out by any means, some of the others as well, but I also want to focus on the dollar. I'm going to see if it continues its ascent, because Monday morning I'm going to do August seasonality, and we can talk about this too. Dollar typically rises at this point in the year, so that could be a contrary trade. And then meme stocks and all this fringy stuff I've been talking about. That's what I'm going to be watching.
A lot on deck. Thank you, buddy.
You bet.
Appreciate it. Stick around. Much more Asking for Trend still to come. Time now for what to watch in earnings. It is a big week for big tech with 4 Magnificent 7 earnings reports on deck. Microsoft and Meta both reporting on Wednesday. Microsoft announced results for the fourth quarter after the markets close. AI and CapEx, we know, key focus for analysts this quarter, and they're expecting commentary about how AI is making the company's workers more productive. Facebook parent company Meta reporting second quarter results also after the closing bell. Analysts anticipating Meta may scale back spending on its Reality Labs division to focus more on AI. It's a theme we've seen so far as big tech CapEx continues to rise. Apple and Amazon, they are both reporting on Thursday. Apple coming out with results for the third quarter after markets close. Analysts expecting Apple to beat earnings estimates for the third quarter, driven by customers rushing to buy products ahead of potential price hikes from new tariffs. And Amazon releasing second quarter earnings also after the closing bell on Thursday. Investors will be focusing on how the e-commerce giant is navigating tariff uncertainty. AWS revenue will also be in focus, which came in below analyst estimates in the first quarter. Well, the buzzy water brand Liquid Death is putting energy into the energy drink space. And join me now to talk about the trend, we have senior reporter Brooke DePalma and Liquid Death CEO Mike Cesario. Mike, welcome, and let's start with you. You know, Mike, Trump and trade and tariffs obviously have been front and center for investors, Mike. Could you walk us through whether Liquid Death, Mike, do you all have tariff exposure, and if so, how are you navigating that?
Yeah, I mean, I think with everything, it's been things that go back and forth. They're saying one thing, but then not another. I think for us, you know, aluminum cans and aluminum, that's definitely one that we had to keep an eye on. But I mean, as we're seeing now, actual implications are not anything too material to us that we're seeing right now. But, you know, obviously we keep a close eye on it.
You know, Mike, we're always looking for line of sight into the consumer. So I'm just curious, based on your business, Mike, and what you're seeing, what do you see with the consumer? How healthy, how resilient, Mike, does the consumer look to you?
Yeah, I think it's you know, you can see across CPG and beverage brands, it's been a tough year with the consumer. But I think what you've typically seen in the past, even in recession periods, premium brands tend to still do well in those periods, because it might be that, hey, people are not going out to the bar to go spend $100 on drinks, so they have people at the house, but you're not going to stock the cheap stuff at your house and invite people over. Like, you probably buy the good stuff, and you kind of create the going out experience in a more, you know, cheaper environment. So you know, we haven't seen since we've launched all the different things, COVID, everything. You know, we've never been hit too hard by, you know, kind of a shifting consumer sentiment.
Mike, you're moving into the fourth category. You're in water, you're in iced tea, sparkling water. Now you're getting into energy, and there's just been so much noise in this space. Molson Coors acquired Zoa Energy late last year. We have Celsius buying out Alani. Why does Liquid Death also need to be in this space too?
So if you look at our brand, right, we've always been more of a younger millennial Gen Z brand. And what we've been really successful at is bringing new younger consumers into these kind of old boring categories that are very, very health conscious, like water and low calorie flavored sparkling water. And when you look at those categories, 50% of the sales in either of those in water come from people over the age of 40. In energy drinks, less than 10% of the sales come from people over 40. So our existing people that follow our brand, we have a massive audience. We just passed Monster Energy for social followers on Instagram and TikTok combined. We have over almost 15 million followers, only Red Bull's ahead of us. So we have this massive audience that love what we do, love our marketing, but maybe they're not frequent consumers of plain water or low-calorie sparkling, but they do drink a ton of energy. And how can Liquid Death create a truly better for you option in the space that then allows us to convert more of our massive fan base into more frequent drinkers?
Mike, I've loved following your marketing campaigns, all the energy behind the brand over the past 3 years. And back in October 2022, when we chatted, you had told Yahoo Finance that you were exploring all possible paths. And we do have a new report from the S&P Global out this morning saying that IPO activity in Q2 was up more than 33% compared to Q1. And so, Mike, is an IPO on the table for Liquid Death?
Look, I mean, we're really just focused on building a big, profitable business. And as long as we are able to achieve that and keep our eye on that goal, we're going to have all the optionality that we want, and timing optionality of when we would want to go if we did want to go. So yeah, we don't have anything specifically set in mind or planned. We're just looking at how do we maximize our optionality, where if we want IPO as an option, then it's a realistic option for us.
Mike, it's been pretty amazing to see the M&As that have happened though this year. PepsiCo buying out Poppi, your current valuation at $1.7 or $1.4 billion as of last year. So M&A, what do you make of this in this space right now? It's certainly buzzing.
Yeah, I think you can see that a lot of the bigger brands have really been struggling with growth over the last 2 years and predominantly the last year. So I think the appetite's finally, now that you can't keep raising price, which is kind of the growth lever through a lot of COVID, isn't there. They have to now start invest. They're starting to invest in acquiring growth through some of these M&A deals with these brands.
Mike, I have to ask you about Ozzy Osbourne as well, Mike, who of course passed away this week. You all had a partnership with Ozzy. Mike, could you just walk us through that partnership, how it came about, Mike, and what it meant for the company?
Yeah, I mean, I grew up listening to punk and metal music, and Ozzy was a huge sort of influence for me. So when we got to work with him about 2 years ago, the first time, and then very recently we did something else with them, it was so cool for me, and just what a great guy and family. Like, they were so easy to work with, and yeah, I mean, pretty wild that one of the last things that he did before he died was a Liquid Death campaign where we sold his DNA on cans of Liquid Death iced tea. So yeah, it's pretty sad to see him go. But
what was the reception to that like, Mike?
It was incredible. It's one of our highest performing social things we've done in a long time, and yeah, I mean, I think people are reselling the cans on eBay right now for like $20,000 a piece.
Wow.
So yeah, I think it was just a really fun way to celebrate Ozzy as like there will never be another Ozzy Osbourne. So literally the only way is if you clone him. And I think that was kind of a fun sentiment to put out there.
Mike, thank you so much for your time today. We appreciate it.
Thank you, guys. Take care.
That is a wrap on this Ask for a Trend. Be sure to come back tomorrow at 4:30 p.m. Eastern for all of the latest market moving stories affecting your wallet. Have a great night.